Right now, while you're watching this video, there's a metal sitting in warehouses around the world that could be worth more than gold in the next 5 years. And almost nobody is talking about it. Nvidia, the company that just became more valuable than entire countries, has a secret dependency that could make or break the entire AI revolution. And that dependency is silver. We're not talking about jewelry or coins here. We're talking about the one material that artificial intelligence absolutely cannot function without. And the supply is running out faster than anyone realizes. Before we dive deep into why silver might be the most critical investment opportunity of this decade, do me a favor and hit that like button. And if you're not subscribed to the Gray Ledger yet, click subscribe. Because we're about to uncover something that Wall Street does not want regular investors to understand. Let's start with a number that should terrify anyone paying attention. $85 trillion. That's not a typo. That's the estimated cost of building out the AI infrastructure that tech companies are planning over the next decade. Microsoft, Google, Amazon, and Nvidia aren't just building data centers anymore. They're constructing entire cities of computing power. And every single chip, every circuit board, every connection in these massive facilities needs silver to function properly. Here's what most people don't understand about silver. It's not just a precious metal that looks pretty. Silver is the most electrically conductive element on the entire periodic table, better than copper, better than gold, better than anything else we've discovered. When electricity needs to move through a circuit with absolute precision and minimal resistance, there's only one material that engineers trust, and that's silver. This isn't about preference or cost cutting, this is about physics. Now, you might be thinking, okay, so silver is useful for electronics, but why is this suddenly so critical? The answer lies in something called AI inference chips, and this is where Nvidia comes into the picture. Every time ChatGPT answers your question, every time an AI generates an image, every time a self-driving car makes a decision, that's happening because of inference chips processing billions of calculations per second. These chips are packed with silver connections because nothing else can handle the speed and heat involved. Nvidia's latest H-series chips, the ones that are selling for $30,000 each and have waiting lists that stretch for months. These chips use more silver per unit than almost any consumer electronics device ever made. We're talking about silver connections, silver solder, silver-coated components throughout the entire architecture. And here's the kicker. Nvidia is projecting they'll need to manufacture hundreds of millions of these chips over the next 5 years. Well, let me give you some perspective on scale here. A typical smartphone uses about 0.2 grams of silver. Not much, right? But an AI server rack, the kind that Nvidia is shipping to Microsoft and Google, can contain anywhere from 50 to 200 grams of silver per unit. Microsoft alone is planning to deploy over 1 million of these server racks by 2027. Do the math on that. We're talking about 50 to 200 million grams of silver just for Microsoft's AI ambitions, and they're just one company. Google is building out their Gemini infrastructure. Amazon has their AWS AI expansion. Meta is pouring billions into AI research facilities. Oracle, Tesla, every major tech company is in this race, and they all need the same thing. But here's where the story gets really interesting. And this is something that the Gray Ledger has been tracking for months now. The world doesn't produce nearly enough silver to meet this demand. Annual silver production globally is about 850 million ounces. That sounds like a lot until you realize that industrial demand alone already consumes more than half of that. And that was before AI became the trillion-dollar priority it is today. Solar panels are another massive consumer of silver, using about 100 million ounces per year. And that number is growing as countries race toward renewable energy targets. Electric vehicles use 2 to 3 times more silver than traditional cars, and EV production is exploding worldwide. The medical industry uses silver for its antimicrobial properties in everything from bandages to surgical equipment. The traditional electronics industry, phones, computers, appliances, they're not going away. And then, on top of all of this existing demand, we're adding the largest infrastructure build-out in human history with AI. Here's the part that should make every investor pay attention. Unlike gold, which mostly sits in vaults and jewelry boxes, silver gets consumed. When silver is used in electronics and then those devices are thrown away, most of that silver is never recovered. The recycling rate for silver from electronics is abysmal, less than 20% according to most estimates. So not only is demand skyrocketing, but the supply that gets used essentially disappears from the market forever. This creates what economists call a structural deficit, where consumption permanently exceeds production. Now, you might ask, why don't mining companies just produce more silver? Great question. And the answer reveals why the situation is so unique and potentially explosive for silver prices. Here's the thing about silver mining. About 70% of all silver production doesn't come from primary silver mines. It comes as a byproduct of mining other metals, mainly copper, lead, and zinc. This means that silver production is largely tied to the economics of these other metals, not to the price of silver itself. A mining company can't just decide to produce more silver because the AI boom is creating demand. They're constrained by how much copper or zinc they're extracting. And here's another wrinkle that most analysts are missing. The easy silver deposits have already been mined. The average grade of silver ore, meaning the concentration of silver in the rock being extracted, has been declining for decades. 50 years ago, miners could extract ore with grades of hundreds of ounces per ton. Today, many mines are working with ore grades of just 3 to 5 ounces per ton. This means more energy, more labor, and more cost to produce the same amount of silver. Environmental regulations, which are absolutely necessary, have also made opening new mines incredibly difficult and time-consuming. From discovery to production, a new silver mine can take anywhere from 10 to 15 years to come online, and that's if everything goes smoothly. So we have a situation where demand is accelerating faster than anyone predicted, supply is constrained by geology and economics, and there's no quick fix to increase production. This is the recipe for a price explosion, and smart money is already positioning for it. Let me share something that shocked me when I first discovered it. The United States Geological Survey, which tracks mineral resources, has warned that at current consumption rates, known silver reserves could be depleted within the next 20 years. 20 years might sound like a long time, but remember, companies like Nvidia and Microsoft are making infrastructure plans for the next decade right now. They need to secure their silver supply chains today, not in 5 or 10 years when prices might be 10 times higher. This is already happening behind the scenes. Major tech companies are entering into long-term supply contracts with mining companies and metal refiners, locking in silver at today's prices before the broader market catches on to what's happening. JP Morgan, one of the largest banks in the world, has been accused multiple times of accumulating massive silver positions. Whether those accusations are true or not, it's telling that sophisticated financial institutions are paying very close attention to this market. Now let's talk about what this means for the actual technology that's driving this demand. Nvidia's chips aren't just using silver for decoration. The metal is absolutely critical to their performance and reliability. Inside these AI chips, silver is used in something called metallization layers. These are the microscopic pathways that connect billions of transistors together. As chips get more powerful and more densely packed, the demands on these connections increase exponentially. Silver has unique properties that make it ideal for this application. It doesn't corrode easily, it maintains its conductivity over billions of electrical cycles, and it can dissipate heat better than alternatives. When you're running calculations at speeds measured in teraflops, these properties aren't nice to have, they're absolutely essential. Jensen Huang, Nvidia's CEO, has talked publicly about the challenges of building AI infrastructure at scale, though he's been careful not to mention specific materials like silver. But anyone who understands chip manufacturing knows that securing strategic materials is one of the biggest bottlenecks in the industry. There's also a geopolitical dimension to this that we need to address. The largest silver-producing countries are Mexico, China, Peru, and Australia. Notice anything about that list? In a world where supply chains are increasingly being viewed through the lens of national security, relying on other countries for critical AI infrastructure materials creates vulnerabilities. The United States government has already identified certain minerals as critical to national security and economic competitiveness. Silver isn't officially on that list yet, but given its importance to AI and defense technologies, that could change very quickly. Imagine what happens if trade tensions escalate further with China, or if political instability affects production in Latin America. The price of silver wouldn't just increase, it could spike dramatically overnight, and any company or country without secured supply would be in serious trouble. This brings us to an important question that I know many of you are thinking about. If silver is so critical and the supply situation is so tight, why isn't the price already through the roof? Why can you still buy silver at around $25 to $30 an ounce? The answer is a combination of factors, but the main one is that the broader investment community has not fully grasped the scale of what's coming. Most investors still think of silver as gold's cheaper cousin, something you buy for inflation protection or as a hedge against economic uncertainty. They do not yet understand that silver is transforming from a monetary metal into the most critical industrial commodity of the AI age. That perception is starting to change, but markets are slow to recognize paradigm shifts until they're already well underway. There's also the fact that silver has been in a bear market mentality for years. After hitting nearly $50 an ounce back in 2011, silver crashed and spent a decade mostly below $20. Many investors got burned and swore off the metal entirely. But market sentiment can shift incredibly quickly when fundamentals change, and the fundamentals for silver have never been stronger in modern history. The setup we're seeing now, structural deficits, technological necessity, geopolitical concerns, this is the kind of situation that creates generational investment opportunities. Let me paint a picture of what the next few years could look like. As AI deployment accelerates, which every major tech company has committed to, the demand for silver in electronics is going to increase by an estimated 30 to 40% by 2028. At the same time, solar panel installations are projected to double as countries scramble to meet climate commitments, adding another massive source of demand. Electric vehicle production is expected to grow by 20% annually, each vehicle requiring substantially more silver than traditional cars. Meanwhile, mining production is essentially flat. There are no major new silver mines coming online in the next 3 to 5 years. The existing mines are dealing with declining ore grades and rising costs. The math simply doesn't work without significantly higher prices. When supply and demand get this far out of balance, the market has only one mechanism to resolve the imbalance, and that's price. Silver will need to rise high enough to either incentivize new production, which takes years, or to destroy demand by making some applications economically unviable. But here's the thing about AI infrastructure. Companies like Microsoft and Google aren't going to stop building data centers because silver gets expensive. They've already committed hundreds of billions of dollars to this build-out. The cost of silver, even if it doubles or triples, is a rounding error in their budgets. This is what makes silver's role in AI so different from its role in other industries. In some applications, manufacturers can substitute other materials if silver gets too expensive. But in high-performance AI chips, there really isn't a viable substitute that offers the same combination of conductivity, reliability, and thermal properties. Sure, engineers could potentially use copper or gold for some applications, but copper doesn't have the same conductivity and gold is already more expensive than silver. For the most demanding applications, silver is simply the best option, and when you're building an $85 trillion infrastructure, you use the best option. I want to share something that really drives this point home. A senior engineer at one of the major chip manufacturers, someone I spoke with on background, told me that they've already run the models on what happens if silver prices double or even triple from current levels. His exact words were, "We'd complain about it, our procurement team would have some tough conversations with finance, but we'd pay it. We have no choice." The performance requirements for next-generation AI chips don't leave room for compromises on materials. That's a direct quote, and it should tell you everything you need to know about silver's pricing power. Now, before we go further, I want to ask you to do something. Drop a comment below and let me know what you think about this silver situation. Are you already invested in silver? Are you skeptical? Do you think there's something we're missing here at the gray ledger? I read every single comment, and your insights help shape our future content. And if you're finding this valuable, hit that share button and send this to someone who needs to understand what's happening in the silver market. This is information that could seriously impact investment portfolios over the next few years, and most people have no idea it's even happening. Let's talk about some specific numbers that really illustrate the scale of this demand shock. According to the Silver Institute, industrial demand for silver was about 550 million ounces in 2023. By 2030, conservative estimates put that number at over 750 million ounces. But here's what those conservative estimates miss. They were calculated before the current AI boom really took off. ChatGPT only launched in late 2022. Most of these demand forecasts were made when AI was still considered a niche technology, not the trillion-dollar priority it is today. If we adjust those forecasts to account for the actual AI infrastructure build-out that companies are now publicly committed to, industrial demand could easily hit 850 million to 900 million ounces by 2030. Remember, total global production is only about 850 million ounces right now. Even if mining production increases by 10%, which would be an optimistic scenario given the constraints we discussed earlier, we're still looking at a market where industrial demand alone could consume almost the entire global supply. And we haven't even factored in investment demand. Here's something that keeps me up at night. Right now, silver is trading at a ratio to gold of about 80 to 1. That means it takes 80 ounces of silver to buy 1 ounce of gold. Historically, that ratio has averaged somewhere between 50 to 1 and 60 to 1. But if you look at the relative supply of silver to gold being mined each year, the ratio is closer to 8 to 1. We mine about 8 times more silver than gold annually. And if you look at the relative industrial utility, silver is far more critical to modern technology than gold. So why is silver so cheap relative to gold? Part of it is perception and tradition. Gold has thousands of years of history as money and a store of value. Silver has always been seen as the lesser metal, despite being more useful in practical applications. But perception can change, and when it does in commodity markets, the moves can be violent and sustained. If silver just reverted to a 60 to 1 ratio with gold, and gold stays where it is around $2,000 per ounce, that would put silver at over $33. And that's without any increase in gold's price. If silver moved to a 40 to 1 ratio, which could happen if industrial demand continues accelerating, we're talking about $50 per ounce. That's a doubling from current prices. And if the supply situation gets truly critical, If there are actual shortages of physical silver for industrial applications, we could see prices that seem unthinkable today. I'm not making predictions here, I'm just walking through the mathematics of supply and demand. Markets can remain irrational longer than you can remain solvent, as the saying goes, but eventually fundamentals matter, and the fundamentals for silver have never been more compelling. Let's also consider what happens to mining companies in this scenario. If silver prices double, the profit margins for silver miners don't just double, they can triple or quadruple because their costs are relatively fixed while their revenue scales with price. A mining company that is marginally profitable at $25 silver could be printing money at $50 silver. And the stock prices of these companies tend to move even more dramatically than the underlying metal, offering leveraged exposure to the silver price for investors willing to take on additional risk. But here's a word of caution, and this is important. Not all silver mining companies are created equal. Some have high-grade deposits and low costs. Others are struggling with declining production and rising expenses. Some are well-managed with strong balance sheets. Others are drowning in debt and poor decisions. If you're going to invest in this space, and I'm not giving financial advice here, just sharing information, you need to do your homework. Look at production costs, reserve quality, management track record, and debt levels, or consider exchange-traded funds that hold physical silver or baskets of mining stocks to spread your risk. There's also the option of simply buying physical silver, either coins or bars, and holding them directly. This has advantages in terms of having actual possession of the metal, but it also comes with storage and security considerations. Every approach has trade-offs that you need to weigh based on your own situation. Now, let's address something that skeptics often bring up. They say that technology always finds a way, that if silver gets expensive, engineers will innovate and find alternatives. And to be fair, human ingenuity has solved countless problems throughout history. But here's the reality check. Engineers have been trying to find alternatives to silver in electronics for decades, precisely because silver is relatively expensive compared to other industrial metals. If there was an easy substitute that worked just as well, we'd already be using it. The laws of physics don't change based on economic incentives. Silver conducts electricity better than any other element because of its atomic structure and electron configuration. You can't innovate your way around the periodic table. You can potentially engineer solutions that use less silver or use it more efficiently, but you can't eliminate the need for it entirely in high-performance applications. Nvidia and other chip manufacturers are absolutely working on ways to reduce silver content in their products. But at the same time, they're making their chips more powerful and more complex, which tends to require more advanced materials, not fewer. It's a race between efficiency gains and performance demands, and right now performance is winning. There's also a time dimension to this that's critical. Even if someone invented a perfect silver substitute tomorrow, it would take years to test it, validate it, scale up production, and integrate it into manufacturing processes. The AI buildout is happening right now. Companies can't wait 5 years for potential alternatives that may or may not work. Let me share one more angle on this that I find fascinating. Silver has been used as money for thousands of years, and there's still significant investment demand for silver as a store of value and inflation hedge, completely separate from its industrial uses. Central banks around the world have been printing money at unprecedented rates over the past 15 years. The money supply in the United States has more than doubled since the financial crisis. Many investors are looking for hard assets that can't be printed or devalued by government policy. Silver offers something unique. It has both the monetary properties that gold has, scarcity, durability, historical acceptance as money, and it has critical industrial utility that gold lacks. In a world of inflation and currency debasement, that combination is incredibly attractive. If even a small percentage of global investment capital shifts into silver as an inflation hedge, the impact on prices could be enormous. The entire silver market is tiny compared to other asset classes. All the silver ever mined in human history is worth maybe $60 billion at current prices. That's less than the market cap of single large tech companies. It's a rounding error compared to global bond markets or real estate. It would take very little money, relatively speaking, flowing into silver to move the price dramatically, and we're starting to see signs that this shift is beginning. Retail investors on platforms like Reddit and YouTube have been talking about silver for years, but now we're seeing institutional interest pick up. Hedge funds and family offices are starting to allocate to silver. ETF holdings are growing. The smart money is positioning before the crowd figures out what's happening. And here's the thing about crowd psychology in markets. Most people wait until an asset has already doubled or tripled before they get interested. They need confirmation that the move is real. By that point, the easy money has already been made. The real returns come from seeing the setup before it's obvious to everyone. That's what we try to do here at the Gray Ledger. We dig into the data, we connect the dots, we try to identify major trends before they become mainstream news. And the silver situation, driven by AI's insatiable demand for the most conductive metal on Earth, this is one of the clearest setups we've seen in years. So where does this all leave us? We have an $85 trillion AI infrastructure build-out that's just getting started. We have Nvidia and every other major tech company racing to deploy millions of AI chips and servers, each one requiring significant amounts of silver. We have structural supply deficits, where consumption is exceeding production and will continue to do so for years. We have geopolitical risks around supply chains. We have a historical undervaluation of silver relative to gold and relative to its industrial importance. And we have very few people paying attention to this dynamic because silver isn't sexy. It doesn't have the cachet of gold or the excitement of Bitcoin or the growth story of tech stocks. It's just a humble metal sitting in warehouses, waiting for the world to realize it can't build the AI future without it. But that's exactly what makes it such a compelling opportunity. The best investments are often the ones that seem boring or overlooked, until suddenly they're not. And when the narrative shifts, when the mainstream financial media starts covering silver shortages and price spikes, it'll be too late to get in at today's prices. I want to leave you with this final thought. Whether you invest in silver or not is entirely up to you. Do your own research, understand your own risk tolerance, make your own decisions, but don't ignore what's happening here. Don't dismiss it just because it doesn't fit the current narrative about AI being all software and algorithms. The AI revolution is being built on physical infrastructure, and that infrastructure requires physical materials. Silver isn't optional for this build-out, it's essential. And essential materials in short supply with exploding demand tend to see their prices go up. It's not complicated, it's just supply and demand playing out in real time. Thanks for watching. If this opened your eyes to something you weren't aware of before, let us know in the comments. Share this with someone who's interested in AI, technology, or investing. Hit that like button if you got value from this deep dive. And subscribe to the Gray Ledger so you don't miss our next investigation into the trends and opportunities that mainstream media is uncovering. The future is being built right now, and understanding what it is being built from might be just as important as understanding what it is being built for.